Hello traders, welcome to another video from my channel. In this video, I'm going to do a higher time frame analysis on EURUSD and will share my long-term view for this year. So what you should expect and what you should plan for this year and for the coming months. As you can see, this is the EURUSD 12 months time frame. In this chart, you can see that I have marked some levels. So we go into those levels and I will talk about them. In this yearly time frame, you can see that Euro USD is within a bullish leg, and the most recent leg is this from this low to this high, which had a displacement and a strong move to the upside. So we did a corrective move after that, which was this correction first, second, and third. So we had three correction move to the downside back into the discount. If we take from this low to the high, this would be the discount area. In this level, we have this yearly balance price range, BPR, which can be an area of support according to the ICT concepts. And we have this yearly low and also this swing low, which is liquidity is resting below this two levels. So this was a level of liquidity, and this yearly candle went into this level, took liquidity from this level and tagged into this BPR, and then quickly and strongly got closed inside this range above this liquidity. What this indicates is the fact that market participants absorbed the short or the position of sellers, and they entered into huge buying positions that caused this yearly candle close back into this range and make a wick. So this wick signs a turtle soup, a fake move to the downside, and also we can call it a manipulation to the downside, and we should expect now bullishness back into the high of this range to the upside. Beside this, we have this corrective move here, range, which is distribution, and we have the second range, which is redistribution. So according to the ICT concept, we should expect a market maker buy model. Considering these two, distribution and redistribution, we should consider a market maker buy model to the upside. The initial targets can be this buy side liquidity, and then it might go higher into this fair value gap and this order blocks, and we will see. So according to this chart, we can expect that this yearly candle, which we are trading now, it should be a bullish yearly candle, and it should expand to the upside, taking the buy side liquidity from the previous high, candle high, and also this yearly high. Why? Because the candle close didn't happen below this low, and it got rejected back inside the range. This yearly candle closed as an inside bar candle, and we should expect this current yearly candle to be a huge extensive candle either to the downside to the upside, but we should expect an upside move as price has been supported from this level and closed back into this range. We should expect this yearly candle to expand to the upside, and as you can see that 20 days passed from the yearly open, price initially went to the downside to do manipulation of the yearly candle to the downside, and then it can do distribution to the upside into this highs and maybe this buy side liquidity. So now we zoom into the 3 months time frame. In 3 months time frame, you can see that we have this inversion fair value gap in here. This was a resistance level when price went down, but what price did is flipping this back into a support area. So this fair value gap flipped into inversion fair value gap and has been supporting the price since then. After this candle closed above that, we can see that this candle, this and this 3 months candles all has been supported on this inversion fair value gap. According to this, we should expect upside move, and beside this inversion fair value gap, we have this 3 months order block. So this 3 months order block min threshold is essential, which is here. We should not see any 3 month candle close below that. This should hold the price to expand to the upside into this highs, and after that it might go into this level. So now we zoom into the into monthly time frame. In the monthly time frame, you can see that 3 months inversion fair value gap is actually a monthly breaker block. So we can define it into this monthly fair value, into this monthly breaker block, and you can see that this monthly breaker block, once price went above that, it has been as a support area, and we have never seen any monthly candle close below the main threshold of this breaker block. This candle, up candle that caused this down move, flipped into support, and it is our breaker block, and its main threshold been holding the price, and we haven't seen any monthly candle close below the main threshold of that. Beside the breaker block, you can see that we had this monthly liquidity pools in this level, price tagged into this internal and sell side liquidity, then it expanded to the upside. If it was bearish, it should not went above this fair value gap, but it closed this monthly candle above this fair value gap, and the next monthly candle got supported into this inversion fair value gap and went higher, and this monthly candle closed above this high, also above this down candle. So what does it indicate? It shows that Euro USD is bullish, and we should expect the next monthly candle to expand into the high of the previous monthly candle instead of going to the low of the monthly candle. So the next round liquidity is this monthly high, and we have this body. This line is our change in state of delivery. As this monthly candle closed above the body of this candle, it is change in state of delivery, and above this high it shows bullishness, so we expect this monthly candle to go above this level, or maybe the next monthly candle take the buy side liquidity from this high and then this high. So what happens invalidate this bullish idea? As you can see that this breaker block and 3 months inversion fair value gap was our initial support area, and this we had here a 3-month order block. Also we have this monthly order block. This two candle can be our monthly order block, and the main threshold of this monthly order block, which is here, is essential area. We should not see any monthly candle close below the main threshold of that. If it happens, then this bullish idea invalidates, and we should expect another move to the downside, and after that we will evaluate if price can go higher. So the main threshold and the high of this breaker block is essential area, and we should not see any monthly close below that. And we expect bullishness to this buy side liquidity, this high, and also this high, according to the monthly. But according to the 12-month and higher time frame, if we have a long-term perspective, we can expect that in the coming years, maybe 1 or 2 candles might expand to the upside and take this buy side liquidity, this previous yearly highs, and this buy side liquidity into this order block and this fair value gap. So we might expect expansion to the upside into these levels. One thing I should not forget to mention is this last down move that caused this order block, then flipped into breaker block. If we take this down move as a Judas swing, it will be our manipulation, and this would be our accumulation. Then -2 and -2.5 would be our standard deviation targets for the coming months and 1 or 2 years. So this 2 level is the next levels after this buy side liquidity is taken, according to this power of 3. So you can see that we have this distribution, redistribution, manipulation, and we should expect expansion according to the market maker buy model. And also we have this accumulation, manipulation, and we should have distribution to the upside into this -2 and -2.5 in the coming years. And this is the long-term view that I have for EURUSD, and I'm expecting EURUSD to be bullish for this year and maybe the next year. I hope you enjoyed and learned something from this video. I will upload another video and will share my view for the coming week and short-term view. Thanks for watching this.